are live. That's Jeff Macke over there. I'm Spencer Israel. This is Jeff Macke live. Jeff, we have to talk about Amazon earnings, which is tomorrow after the close. But before we get to that, should we talk about what's been happening in retail land of late?
I
Because
think it's all people can talk about, Spencer. I mean, the media is covering Bitcoin. I hear software stocks are a little soft. That's what I hear. I
that's
don't
what
know.
everyone's talking about is the software.
See, I'm having a hard time picking up that message because of the just unbelievable amount of money that's being made in people buying consumer staple stocks. I mean, holy crap!
Consumer staples. So
It's the party. It's just the party that keeps rolling no matter what. It's why even talk about Bitcoin when you could be long Dollar General.
So this is a chart from B of A showing the average, the 4-week average net flows as a percentage of market cap. So this is specifically into the consumer staples sector. So
yep. And, as usual, my feelings about the sector definition. So we're going to take some liberties here in terms of some of the groups. Some things I just regard as staples because they're staples. But just floods of money coming in. People are kind of yanking out of apparently anything digital and just dumping it into, it's, I guess, the idea being grocery stores can't just be replaced by Claude. You can't vibe code a grocery store.
And this is not like XLP. These are consumer staple stocks. They're tracking the flows into stocks.
Yep.
So people are just buying. Pepsi, we know they had earnings.
Terrific reaction, right? I mean, look at that, and you can kind of just divide them. I mean, you're seeing it almost. I'm not a big K-shaped economy fan, but you look at the reactions of like Pepsi, who said, "You know what, we're cutting prices." Normally be a sign of weakness. That stock took off like a scalded dog. You saw Chipotle came out and their same store sales were terrible. Taco Bell's up 7%. They sell basically the same facsimiles of food. I mean, you're in the same ballpark, the same neighborhood anyway. Just one's a little more expensive, one's a little more shishi, and the other one is actually doing business. So yeah, there's this rotation into kind of, and not even really necessarily cheap stocks. Just I mean, look at the big box. Yeah, that's the best month for Target since I was like probably 6. I mean, not really, but it's been a while. It's been a minute or two since Target's had a month, a start to a year like this. 17% year to date already, and it's February 4th, and all they've done is they replaced their CEO. They had the new guy come in. They've got riots in the streets of Minneapolis, where the place is actually based in this white elephant of a headquarters, and the stock has just been quietly cranking along quite handsomely there. It's nice for Minnesota to have something good associated with it.
Target, of course, not technically a consumer staple, right?
It's a discretionary, even though they, just like Walmart, get about half of their revenues from groceries. So we're just, we take liberties. I guess the people who decided which sector is which, they just, they thought Target was a little fancier. Walmart, of course, the $1 trillion breakout. Finally, something good happening for the Walmart family.
Finally, it's been so long. The Broncos lost. It's been a tough year for them.
Yeah. So it's good to see something good happening for them. They still own a whopping percentage of the company just because they had the best financial planner ever in the history of the world when Sam Walton died. And the family, you never hear a bad thing about them, and now they're trillionaires. So actually, this is kind of good things happening to responsible people, but also just a ridiculous breakout. You and I have talked about being long this stock, and it's been so long. It felt like it's felt so long, kind of between 90 and 100, and it just drifted and it got beaten back by the big round number. And once that broke out, man, this went from me feeling like a trapped long to me telling people what a patient, shrewd investor I am, just for being willing to own a consumer staple stock with a PE of 40 that has a 3% net margin, give or take. It's through the tariffs and through everything else. So, again, it also changed their CEO. So, it's they're cooking along. They're cooking with gas. People are making big bets on them out there. What you haven't seen.
Walmart, of course, is the largest holding largest weighting in XLP. It's about 12% of the fund. So going back to that idea about people buying staples, this is a staple, and you can see that people are indeed buying it.
The largest employer in the world, except for like the Chinese army or something. They're big. It's a big operation. It's a large operation. The bet there is that they're going to be able to improve margins. And with the margins being tiny and the revenue base being about $700 billion odd dollars, that would scale rather handsomely for them. They've also become profitable online. They kind of got into Amazon's kitchen a little bit, and they're making money doing it. And so it's it kind of earned its place there, even though at these levels, pretty high priced. I mean, if gun to head, I'm putting new money into Target. I am not, in fact, putting new money into Walmart. I am just celebrating the money I have there.
All right, hold that thought. I want to go out of order, and I want to just do Costco here for a second. Then we'll go back to Amazon. So Costco also a staple. The number 2 weighting in the XLP, about 9%. So if you're buying XLP, you're putting 20% of that fund is Walmart and Costco. And this qualifies.
Which again, you come down to what's really a staple here, because I realize you can get an entire pallet of like Cheerios at Costco, but it's also a Shishi membership club place that you can buy a sauna. Is this really a staple? Are we positive it's a staple? They have a collaboration with Nike. So I'm looking for some cheap Nikes, a bunch of Cheerios, and a $3,000 sauna, and maybe a bar of gold. Costco's got its own operation, but they're a separate deal. But that stock given up for dead, called super expensive, and still was expensive when it bottomed at 850, and it's going back through 1,000. It's going to go to all-time highs. I mean,
is that on the left there? Whatever that is, that the all-time high right there on the left?
It's sniffing distance. If not, I think they did make an all-time high in the last 52 weeks, but it's pretty close to it. We've again another name we've talked about. They consolidate, they go higher, and they're just continuing to take share. We'll touch on Amazon next, but I mean, it's these people like the retailers right now.
All right, let's talk about Amazon, the elephant in the room here. Whoops, where's my Amazon chart? There it is. Amazon reporting earnings tomorrow after the close. A lot to be made of that. There is going to be discussions about AI demand for AWS. But you like it more for what they're doing in their original business, which is the e-commerce stuff, and now they're getting into, or it seems like they know what they're doing in regards to real brick and mortar retail. So, what is your take on Amazon heading into this report? I know you are long via options in some way, shape, or form. Not sure exactly how, but give us, what do you expect them to say? What do you expect the market to say?
The market's going to trade off how it does on AWS. They've decided it's going to grow at 21%. And so that's the big number that everyone's going to pretend matters a lot. And that's probably going to drive the next $15 move in the stock. But what I like about them is the same type of math that you saw from Walmart. They're just a huge revenue base. 2/3 of the revenue still come from retail. That'll grow about 10%. They've got kind of better margins than Walmart, but they're also going into physical retail. If they didn't have all this tech exposure, Spencer, where all the selling is going on, this company could really be something. They could do something. They got to focus on that 4% net margin business of discount retail. But they're building big box next generation stores. And yet again, if you're talking about a way that you can lever up your earnings, give yourself about $600 billion in revenue at a tiny margin and just make that margin go up 1%, and boom, you're making a fortune. You can afford all the satellites and AWS services, and they pretty much do everything right now. It's amazing that this was a bookstore. I actually remember when it was a bookstore that lost like 35 million. I remember reading the prospectus where Bezos was like, "We're just going to invest our money where the hell we think it works." Turns out that was great. That was a great moment in government filings for IPOs, because that was a really good strategy for Amazon.
Man, if only Amazon wasn't saddled with being in this software business. You've never heard that sentence said before, ever, I don't think.
They need to move more T-shirts, man. But if they can make this store in Chicago work, again, the consolidation of all those kind of ridiculous Amazon Fresh stores and all those kind of gimmicky over tech stores that they had before, that was taken as a failure by a lot of the street. I think it's finally just Amazon kind of getting their act together and realizing that Walmart is a real competitor. Walmart does about $200 billion or something online, which is a much bigger company than Target, and it's profitable. So they're making money, but they're doing it in two separate ways. Right now, Amazon's all distribution centers, tons and tons of these distribution centers. That's how they get stuff to your house in hours sometimes. Just bonkers fast. Like if I order batteries in the morning, I'm honestly super annoyed if they're not there by lunch. It's just like, where the hell are my batteries? My God, where's my guy in the van?
All right. So bottom line here is the e-commerce and the retail at large hasn't really been a driver of the stock for quite some time, right? The AWS that's where the party has been. You're saying, I think we're going back to the way things used to be. I think what Amazon does on the physical stores front is going to really become a driver for their business and therefore the stock. Do I have that right?
I think you kind of have it right. I mean, it's the best opportunity they have. They're making hundreds of billions of dollars in revenue on a division that they kind of ignore. It's just been third-party sales, and frankly, the shopping experience is a little dated. And so, as we've talked about before, rather than the chip companies, rather than all these software as a service companies that are just getting Mergelized this week, I'm looking for kind of the second derivative AI plays, and they can actually make money from it. When I do order those batteries, Amazon should know what kind of batteries I always buy, what kind of stuff I have in my house. They should know how many fire detectors I have. I mean, my God, I've had their little spy camera speakers in my house forever. Stop pretending like you don't know every single thing about my entire life, Amazon, and make shopping a little easier. So I think it's an under-profited. They're not making as much money as they should off retail, and that's going to be their best way to pay for all these other little far-flung operations that actually are going to have higher margins.
Yeah, I've always thought Amazon could do better at recommending me products based on things that I've already bought. Do not ask me if I want more of the thing I already bought. If I buy a bed, I only need one bed. You know what I mean? I'm not going to buy four beds, but you might want to recommend me some pillows or some blankets or whatever.
They make money off it, but also the scammy. I buy a pack of vitamins, and so all of a sudden I'm getting freaking just a box of vitamins sent to my house like 5 times a month. They do a lot of just stuff like that. They can do a much better job surfacing what your real purchase intent is just by knowing a little bit more about you. That's super handy for AI. It's also really handy for AI if you're just going to run your warehouses that way. I mean, they have warehouses that basically don't need any human beings. The dystopian future without human workers is already here, and it's an Amazon distribution center where someone just comes in and probably doesn't even turn on the lights because what do the robots care? They're all working on LiDAR anyway.
I guess lights save money on electricity. I don't know.
It's spooky, but I mean, honestly, whatever it is that you order there's probably no human being hands on it until it gets thrown on your door 20 minutes after you click buy now. It's a pretty impressive company. But, the stock has been dead money for a while, just kind of going up sluggishly. Every time it rises about $3, it seems like Mr. Bezos and the ex-Mrs. Bezos both just pile in and start dumping shares. That's been a little bit of a hangover for it. But, I guess they're entitled to it too, whatever they want to do, whether you want to buy the Denver Broncos or a 500-foot mega yacht. If you've earned enough money to do it, it's your choice.
But by and large, you're still biased to the upside.
I think it's going to break out. Yeah, I think that at this point it's actually cheaper on a multiple basis than Walmart, which is a little wild. And that's based entirely on sort of the potential of what Walmart can be a little bit more like Amazon. If you can buy the actual Amazon, that seems to make sense to me at certain valuations. And traditionally Amazon can really earn whatever they want. It's just a matter of how much they're going to spend. So it's not, if they're the best deployers of capital since Warren Buffett, probably, just in terms of we bought stuff that makes a lot of sense. I mean, we invented Prime, which wasn't even a product. Remember when Prime used to be just, we'll get you your package in about 2 days?
Yeah.
It wasn't even a promise. I mean, it was just like, you sign up, you send us for $5 a month and we'll get your package to you, pretty quick. And now it's Prime Video. Now they're making movies. They own James Bond, for God's sake. I mean, they've done some nice expanding. but they, in the meantime, still have a huge retail operations growing at 10%. They haven't even touched stores. That's only 3% of their revenues, physical stores. Crazy. So, as you recall, when they bought Whole Foods, it just destroyed the entire grocery space for about 6, 7 months. I mean, everyone just thought this is it. This is the death of grocery. You would think it would make more of an impact or negative impact on some of these staples that Amazon was going hard into actual physical retail. But it's clearly, if it's having any effect, it's the opposite effect of, just all of a sudden people are going to be rolling in cereal. Maybe that's the idea behind all these staples, is Amazon's going to be delivering them whether you want them or not 5 times a day. And, that's the future. The future is just ramen noodles and Pepsi.
So the market is giving Walmart the benefit of the doubt for how it can be more like Amazon, but it is underestimating how Amazon could be more like Walmart.
Right. And just using a bunch of metrics that have never paid off. If you kind of tried to value Amazon and what they're making quarter to quarter, you've missed a really nice stock over the years. So, like I said, it's going to trade, I think 21.5 is the estimate for the percentage growth of AWS. And that'll try to decide what the $15 for the stock is.
Yeah.
Amazon themselves don't really give a crap. And they've earned the right through becoming like the 4th largest company on earth, on the heels of being at once an online bookstore at one point. So I think they deserve to allocate their capital as they see fit, short of just an absolute disaster. It's a stock that's due to break out, and it's seldom that they underperform other retail operations quite this extensively as they have over the last year.
All right, let's wrap this up. Why do you want to talk about the dollar stores?
Just to look at the freaking dollar stores. I mean, no other reason really than, holy crap, they've doubled over the last year and are still just really solid. Dollar General's kind of the pick of the litter there. But I mean, again, big box stores, just convenient, staple-ish type of operations out there doing something a little better than other people. All these companies, they just give you your own special sauce. Costco is the fancy club. I know you like going there because it's just... Yeah. It makes you feel exclusive. You're a little bit.
I was there on Saturday, and I've made a point in the last few months to try to not go more than once every 5 weeks. Because if I go more than that, then I'm just gonna be spending all my money there. So I've made a point to space out my Costco visits now because it's just too much.
I'm a man of the people, so I like to go to Walmart. That's where my folks hang out. That's where
to each their own.
Yeah, well, that's kind of the point, though. To each their own, and so there's a place, Dollar General. These guys are slightly smaller footprints, but they're convenient. They cleaned up the stores a little bit, and they're a nicer place to shop, and the stocks are reflected. My point being that stop whining about Bitcoin. The staples are on absolute fire right now. Most of these stocks are a lot cheaper than the stuff you're going to buy in tech dip land anyway. So just relax, and there's always a bull market somewhere, as my friend Kramer used to say. And right now, it's in consumer staples.
And that sums it up right there. There you have it. By the way, Jeff wrote about Amazon a lot more in depth a couple weeks back and their plans to have a Death Star type facility in Illinois. If you want to read more about it, the link is in the description on YouTube. That was for members of the Macke portfolio. If you want to just get Jeff's thoughts on retail and the consumer and his free email note that goes out a few times a week, you can do that too. That link is also in the description below. And Jeff, we will see you next week. We'll talk more about Amazon and the reaction to their numbers. And we are heading into the retail portion of the earnings season. So much to discuss.
I've been in training for weeks, Spencer. Weeks. I'm absolutely fit as a fiddle. Been riding my Peloton, getting ready for the sleepless experience that is earnings season.
Oh boy, we will see you there. Thanks for watching. Go buy some stuff at the store. I guess.
Yeah, go shopping.
Go shopping. Bye guys.